This is the fifth update on the 50K portfolio. As you can see, it is almost there. The portfolio reached 44,000 in intraday trading and it closed around 42,000, as you can see here. I'm going to break down the composition of the portfolio and I'm going to explain what gets me to near the end. Just a quick reminder that this is a concentrated option portfolio. The holdings and strategies I have implemented are on the risky side. This portfolio will also be limited to 5 or 6 holdings with majority of capital allocated to long-term options. Minority of cash will be used for shorter term swing and day trading. As you can see right here that my cash position right now is 2.9 thousand. First option here is Apple. As you can tell by the expiration day, this is a swing position. I bought a long call this morning and sold a call against it. I'm pretty sure the short call, which is this one, will be worthless and that will reduce my cost basis. I'm planning to sell this by tomorrow, and as you can see that I have one expire next week for 327.5 strike price versus the 327. So that will be my first option. Next up, I have Disney. Again, this is a diagonal spread with a long strike of 125 and short strike of 130 at 2 different expiration days. One expire next year, the 21st, and then the one this year in July. This is also a swing position, but with an extended time horizon. The reason I set my swings this way is because of the risk and reward. If you look at the Apple chart here, the 1-year chart, as you can see that Apple price is near its all-time high. Basically, this can be interpreted as a lot of good news has been priced into the stock. With Disney, it is still double-digit percentage down from its all-time high. As you can see here, the 52-week high it's 153, and right now Disney is around 123. And that's for good reasons, of course, like the parts being closed and also there's no sports going on right now. But I think the risk and reward is pretty attractive at the price I entered. For example, there's also catalysts of Disney Plus, sports and ESPN coming back, and also parks reopening and etc. All those are not fully priced into the stock. Follow those two names. I have two energy names, RIG or Transocean. This is an offshore oil trade. RIG is one of the best in its class for offshore drillers, and they have enough capital to cover their near-term obligations. And as you can see, I sold 15 puts against it. So I have this is a cash covered put, and I'll basically own this if this thing is not above $3. The next one I have is Exxon. This is another swing and energy play. This is much safer play than RIG because of the size of the company and a much better quality balance sheet compared to RIG. Lastly, we have NEO. This is the investor relationship of NEO with news release. NEO provides May 2020 delivered update today, and they delivered 3,400 vehicles in May 2020, achieving record high monthly deliveries. And this represents over 210% increase year over year. As for NEO in terms of my portfolio, as you can see here that it's roughly $34,000, which accounts for about 80% of the overall portfolio. This is the main reason why the portfolio is near its 50K goal. And as you can see, my average right here, it's 579. The average should be lower since I have bought a lot of contract at a lower price. So the contract right here, I believe I bought it around $2 area, and it's up pretty significantly. So overall, I don't think this portfolio will hit 50K anytime soon. In fact, I just want NEO to consolidate around this area, the $5-6 area at this point, and I'll be happy. So obviously, how NEO perform will also depend on the environment, the market environment, and also some other external factors. But overall, I think that in the next few months, I will reach 50K unless NEO drop again. But overall, thank you for sticking to the end, and I will provide a next update next month. Thank you.